A few years ago, I was all about dividend investing, buying solid stocks and collecting quarterly dividends, letting time do the work. In 2014, I made a huge shift. I wanted a little bit more control over my trades, and it's when I started trading options. And selling covered calls made so much sense to me. I was able to take the shares that I owned, and I was able to sell covered calls against them to give me cash flow into my account. One of the cool things that's happened over the past decade is that our brokerages have gotten more advanced, and so has my trading. I'm going to show you today how I roll a covered call in a single transaction. We're also going to look at a bull put credit spread and how easy it is to set up. The reason I love these trades is because I don't have to tie up a huge amount of capital and I can still make a very great return. My name is Levi Woods and this is Drawbridge Finance. In today's video, we're diving into practical option strategies that you can execute right now in BMO's trading platform, BMO InvestorLine. Big thanks to BMO InvestorLine for sponsoring today's video and making it easier for investors to take control of their options trading. They have industry-leading trading capabilities, advanced tools, and a powerful trading platform. The BMO Active Trader platform is for advanced traders, and it enables investors to execute, customize, and optimize their trading experience with key features including real-time streaming, options, chains, and strategies, and featuring advanced charting offering a technical analysis experience. In my opinion, one of the easiest and most powerful strategies we can use is selling covered calls. It's a solid strategy if I already own 100 shares of stock and I want to generate passive cash flow while reducing my downside risk. BMO's been nice enough to set me up with a demo account, so I'm going to show you exactly what I have. If we look in the Accounts tab, in this account, there are 100 shares of Apple. I'm going to show you how I set this up. I'm going to click on the Trade tab, and I'm going to show you two different methods. If I want to sell the covered call on the shares that I already own, it's very simple. Under the Trade tab, under Options, I'm going to search for the symbol. I'm going to type in AAPL, and it comes up US. I'm going to click Select. And it shows me already that I have a current holding in this demo account of 100 shares. What I want to do today is sell a call against this and collect some cash flow into my account. So in the single laid option chain, don't even need to open it. I can just select the expiry. And if today is March 31st, I'm going to go out to May 16th of 2025. I'm going to select the price. The price of Apple right now is trading at $221. What if I was to agree to sell these shares for $225, which is about $400 higher than the current price? I'm going to click on Sell to Open, and I'm going to click Number of Contracts. Now, because I own 100 shares, I just put in one contract, Sell to Open, a 225 strike call, and I'm going to select Covered. I own 100 shares and I'm selling one contract against it. It automatically gives me a quote real time, and it shows the call option Apple 2025 May 16th 225 strike is currently trading at $785. By selling this, what happens is that I get a deposit of $785 into my account. Down here in the strategy quote, I can put in a limit price and I can put in $785. All I have to do is fill this in and push enter. And then it shows me my order value is going to be $785 and the estimated commission is going to be $1120. Estimated total cash deposit into my account is $773. Now I get to keep this money. If the shares go up in value, they get called away. I also sell my shares for $225. I get that money as well, but I get to keep this money forever. This is the premium that I receive. Now, what if I didn't own the shares? Very simple. BMO makes it very easy. I can just click on add an equity leg. So I'm clicking on this button right here. And what that means is I could actually purchase the shares. If I wanted to buy 100 more, I could buy them right now. And I can just type that quantity in here. It will be doing two simultaneous transactions. The first component will be selling the call and collecting that $785. The second component will be buying 100 shares of stock for $221. Now, it does a real-time quote here. So if I do a net debit, it tells me all of the specifics, the bid, the mid, the ask. Now for me, I typically put these in at the mid price and try to get filled for that. So I'm going to put that in at $213.30 and it will automatically update this. My order value is going to be a debit of $21,330. I'm going to click submit. Now this pulls up my order review and it tells me exactly what I'm doing. Covered call, first leg, sell to open one contract, second leg, buy 100 shares. And I would just click on submit order, and that's as simple as it is. When I sell a covered call, what I want is for the stock to increase in price, and I want that covered call to actually go in the money. Now, the reason I like this is because that puts me in a position where I've made the maximum profit that I've agreed to. When I do that, I often want to hold on to my shares and I want to roll this out and I can create even more income from doing this. I'm going to show you in the BMO platform how I roll a covered call. Now let's just take a look at Apple again. Under the trade tab, under options, I'm going to pull up the position. I've got 100 shares of stock and I may have a call expiring later this week. Now let's look at what might be coming up. We've got April 4th and I might have a 220 call strike on. What I'm going to have to do is close this out, because if I don't, the stock is actually trading right now at 221 and the stocks are going to get called away from me at 220. I want to roll this out and see if I can get a little more income. I'm going to select buy to close and I'm going to click on one contract. It's going to cost me a debit to close this out. I'm going to pay $445 to close this. Then I'm going to click on add option leg. And what that's going to do is it's going to allow me to do a secondary transaction at the same time. I'm going to select a different expiration, say May 16th. What I want to do is I want to see if I can select a little more money for selling a higher strike. So I'm going to look at it May 16th. I'm going to look at the 225 call and I'm going to say sell to open. And I'm going to also choose one contract. I'm going to hit enter and you can see here what is happening. I will be simultaneously purchasing or closing the April 4th 220 strike and paying $445. I will also be selling the May 16th 225, which is $5 more, and I will be collecting $814. This is amazing because what I actually do is it gives me a chance to get $378 credit into my account today for agreeing to sell my shares at a higher price. Pretty awesome. And I hope you can see why I do this type of trading in my own account. Very simply, we just hit submit. I'm going to do an order review and I just review the information, option roll, buy to close the contract, sell to open the next contract, and the order value is $378. Click submit and it's as simple as that. Now, what if I wanted to be a little bit more complex and I didn't want to own the underlying underneath? What if I wanted to take a complex option trade that's two different parts? It's simultaneously selling a contract and buying a contract. I'm going to show you how to set that up. It's a pretty awesome trade. I'm going to pull up ARKK. And one of the things I like about ARKK is that there's no earnings on ARKK because it's an ETF. And what I'm looking at is the fact that it's trading under its 200-day moving average. And what I want to do is I want to make myself a profitable zone where I can make money as long as the stock doesn't drop too much further. I can see the back here in October of last year. There's quite a bit of support at this level around the $45 mark. And so what I want to do is I want to sell a put below this, but I don't want to tie up a huge amount of capital and I want to reduce my overall risk on the trade. So what I'm going to do is I'm going to buy a put at the same time. Let me show you how I get that set up. I'm going to go to trade and then options. And once I'm there, I'm going to search for the underlying symbol. I'm going to go for ARKK. I'm going to scroll down. This is the one I want, the ARKK Innovation ETF. This time I'm going to do puts. I'm going to select put. I'm going to select the expiration, which is going to be May 16th. I'm going to select my strike price, which I've already determined is that I want it to be at the $45 level. I think that the stock is going to trade above that level. I'm going to say sell to open. The number of contracts I'm going to do is 1. Now, if I was to do this as an uncovered position, I would collect $200 for doing this position. And I'm not doing that today. What I want to do is limit my potential loss, because the loss on this would mean that I would be risking about $4,300 total. Instead, what I'm going to do is add an option leg to define my risk. So this one's also going to be a put. I'm going to select the expiration date, which is going to be the same as the one above, May 16th of 2025. I'm going to select my strike price, and this is going to be the 40 strike. What I'm doing is I'm defining the risk at $5 wide. I'm making a $5 wide bull put credit spread. This one I'm going to be buy to open because I'm purchasing the May 16th, 2025 contract. I'm going to select 1. So I'm selling the May 16th 45 put for $2, and I'm simultaneously buying the May 16th, 2025 40 strike put and paying 82 cents. So I'm paying from my $200 that I'm collecting about $82 of that. And that leaves me with a total net credit of around $120. So I'm going to type in $1.20 here. The order value here being $120, the commissions, and then the estimated total. I would just go over here and hit submit. This is how I would set up a bulk put credit spread. Now at BMO, by making 150 eligible trades in a 3-month period, a trader using BMO's InvestorLine will qualify for the active trading pricing, which brings the base rate down to only $3.95 a trade, and it gives you enrollment in BMO's 5-star program. 5-star members get access to great perks, including professional level tools like BMO Active Trader and dedicated 5-star support. I've used a large number of platforms, and the look, feel, and customization available at Active Trader web-based platform is fantastic. It's one of the best I've seen from the big banks. The thing I love about these strategies is that it gives me a little bit of downside protection. So if the market moves sideways, I can still make money. I'm reducing risk, and I'm allowing myself to make some money if the market moves up. It's fantastic. BMO InvestorLine and BMO Active Trader make executing these trades seamless. And I want to say thanks again for them to sponsor this video. If you found this video helpful, remember to hit that like button and subscribe for more expert options strategy. And if you want to check out BMO InvestorLine, use the link below. Thanks for watching, and let's get rich together.